Hi everyone, welcome back to Interesting Investments, where we invest in what is interesting. Today I'm talking about Meta, a very profitable company with a lot of baggage, like one of the most hated companies in the world, baggage. But as many investors know, the more the public tends to hate the company, the more shareholders tend to love it. Wall Street has always loved a good villain. That being said, the topic I want to discuss is how Threads is Meta's last chance. And what I mean by that is Meta's not going to go bankrupt, and neither are they facing complete irrelevance. Even though sometimes I do forget people use Facebook still. When I say Threads is Meta's last chance, I mean this is the last chance for Meta to prove that they can actually produce or innovate on something. If they can't successfully launch a new product in the exact industry that they are the biggest player in, that's a defining moment proving that Meta is no longer capable of innovation, and that it should be treated like a highly profitable legacy company, less like Apple and Amazon, and more like IBM. So what's the point of any of this? What I'm trying to say is that Meta is no longer a tech startup really, or even a tech company almost. It's basically just a monopolistic advertisement company. Unfortunately, one that happens to spend a staggering amount of money on research and development of projects that never work, half of which are never even seen or heard about, and the ones that are released almost always fail. Because these vanity projects are actually a destruction of shareholder wealth. And that's the main purpose of this video, is that Meta is a systematic failure of reinvestment of its own capital. It is unable to reinvest its own money and turn anything into any amount of success. And yes, majority of this has to do with Mark Zuckerberg's ego. And unfortunately, he is probably unable to be removed from this equation, especially because he has majority voting power. But it would be nice if enough people convinced him to retire. An overly simplified timeline of Threads so far is that Twitter is seemingly always on fire. Mark Zuckerberg is attracted to internet fires. Therefore, Meta makes Threads because why not? This is their core industry that they are in, and one of their major competitors is currently having a disaster of a time. And because Threads was basically plugged into Instagram, it exploded off the scene almost instantly, mainly because it was shoving it into everyone's face on Instagram. But in the first week, it did basically break every growth record possible. That being said, Threads had clearly been rushed out the door, as it was lacking many features that are just even commonplace on other platforms and on Twitter, but also because you couldn't even sign up for Threads without already having an Instagram account. So Threads from the beginning wasn't even able to stand on its own 2 feet, which makes growing a sustainable network and community a bit of a challenge, which they found out relatively quickly as the user base fell off a cliff the week after that. And I'm not going to predict whether Threads will live or die, because I have no way of knowing that. Twitter, now X, is clearly not running smoothly either right now. So Threads' opportunity is still there. I expect it'll be about 1 to 2 years before we truly find out if Threads is able to survive on its own, and become an actually successful project of Meta's, which would be a first. So let's take a look at Meta's recent performance, to get a broad summary of how the company is doing overall. Currently, Meta's market cap is just over $800 billion, and a price-to-earnings ratio of about 23x. Definitely a discount when you compare it to other major tech companies like Apple, Microsoft, Google, etc. And as of year to date, Meta is up a staggering amount, 152% actually, just since the beginning of the year. And as a disclaimer, I do own Meta, and I have owned it since basically the beginning of the year, so I've witnessed a lot of this growth. My portfolio has greatly appreciated it. That being said, if we look at the 5-year returns, we start to see some issues with Meta. Because as you can see, Meta's not reaching all-time highs, it's just trying to reclaim their all-time highs. That being said, up 100% over the last 5 years is still a really good return. Meta's all-time high was achieved in late 2021, about the same time every stock reached their peak. Before catastrophically falling down 66%, nearly 75% from the peak. Most of the drop not only coincided with a larger market sell-off, but was also heavily fueled by Mark Zuckerberg's extreme spending on research and development, primarily in the metaverse and AR/VR systems. Even to this day, I don't know a single person who owns any of those AR or VR headsets from Meta. And since then, under Mark Zuckerberg's leadership, Meta has cut a lot of the R&D projects, and has laid off a staggering amount of workers. But he hasn't given up entirely, but we'll get into that later. Now let's take a look at the revenue. As you can see by 2022's revenue, both in dollar amounts and in growth percentages, you can see why a lot of the spending cuts have happened. Now, this isn't necessarily a bad thing, especially because the 2021 surge was very unexpected and very hard to replicate. Everybody was in lockdown and on social media. So the fact that Meta has actually been able to maintain that revenue even afterwards is a pretty impressive achievement, to be honest. But Wall Street is always unforgiving to any company that doesn't grow at the rate it wants to, so that's not any surprise. But the part that actually concerns me the most, and is why I am uncertain about if I want to hold Meta for a long period of time, is because of its profitability. Which almost sounds like a joke because Meta is incredibly profitable, like 40% profitability, at least traditionally it was. But in 2022, that fell to a staggering 20% profitability, which is half. So how did that happen? As we saw, the revenue only declined 1%. How did the profitability fall off a cliff like that? Well, that's the point I'm trying to make with Meta being an irresponsible spender of its own revenue. As you can see from this cost breakdown, cost of goods sold has increased a little bit from about 18% to 21%. This is probably largely to do with Apple and against the whole anti-advertisement campaign on the internet lately. So while this is not the primary concern, it would be nice to see Meta still lower this by finding alternative ways of delivering targeted ads. But the primary issue is the operational expenses. This has two primary categories, but one is the biggest spender. The first is general administrative expenses, basically support personnel and resources. This has gone up a bit more than I would like it to, but it's not a major issue. The biggest problem is the R&D spending, which now makes up 30% of every dollar Meta makes. Yes, Facebook and Instagram, the two apps and the company that has rarely changed in the last 5 years, is spending 30% of revenue on research and development. That is a lot for a company that has never successfully launched a single product besides Facebook. You know, the first one back in 2008, which takes us into Meta's track record, or lack thereof. And as a reminder to anyone who doesn't know, both WhatsApp and Instagram were purchased by Facebook, and therefore aren't really considered products of its R&D spending. You could consider Instagram Stories a success, as well as Facebook Marketplace. However, I don't really know how much R&D had to go into these, because these are pretty much knockoff products that are shoved into Facebook and Instagram anyway. They didn't even have to come up with the ideas, so I know there's still a lot of programming involved and handling data and all that, but come on, 30% of revenue and R&D for that? Now let's compare that mediocre success to the long line of Meta failures. First, the metaverse, which has clearly caught on fire and burned to the ground, because for some reason nobody wanted to live in Mark Zuckerberg's world. Oculus AR/VR headsets, which are considered pretty high-end and pretty nice compared to the rest of the industry. That being said, it's still outsold by the PlayStation VR, because people would rather spend their time in a video game than whatever Meta's weird chat function is. Then you have the previous projects, which everyone forgot about already, like Libra, the cryptocurrency, and Aquila, the solar drone internet beaming tech thing. Yeah, nobody basically wants any product from Meta. For some reason, it refuses to admit it's just a social media company and nothing else. But Mark Zuckerberg is truly in denial that he's not apparently Tony Stark. As an investor of Meta, I would like to see this. I would like to see them focus on Threads, because this is their core product and a core industry to them. If they can't succeed here, they might as well give up on everything else. Because if they can't compete in their own core industry, then they might as well just return wealth to shareholders, so that they can invest it in other companies that actually can innovate. Threads clearly has perfect synergy with the rest of Meta's business. The success here could lead to more clones of other competitors in the future, TikTok being the most likely candidate if Threads works out. And as I say all this, I do know basically anything good for Meta is bad for humanity, but hey, you win some, you lose some. So overall, my portfolio has benefited a lot from Meta's return to glory. But can I really consider this company a long-term investment when it is constantly shelling out billions of dollars to ludicrous ideas it never had a chance in? No matter how profitable Meta is, it doesn't matter if it all gets spent recklessly on nonsense anyways. Meta is no longer a startup. It's 15 years old and is basically the indisputable king of social media. It needs to act like one. Because compared to a lot of big tech competitors who have fantastic corporate leadership, with the CEOs of Microsoft, Apple, and Amazon being incredibly efficient operators of their business, and Google to a little bit less degree, but that's not the subject of today. But Meta is alone with a company this big, this old, and this profitable to still act like it can spend whatever it wants and doesn't have to worry about things like profitability or returning wealth to shareholders. You know, the people who actually own the company. While I'm not going to sell Meta yet, my overall summary of its performance is a fantastically profitable company that's pretty much universally hated, with the unfortunate side effect of having some of the worst leadership out of the entire tech industry. Meta would be one of my favorite companies to hold long term if it just embraces being the villain that it already is. Why play the hero when everyone loves a good villain? But let me know what you all think in the comments below. Tell me about what your thoughts of Meta are. Wouldn't touch it with a 50-foot pole? Or do you think it's the bargain of big tech? And as always, if you like the content we make, please like, subscribe, and keep watching Interesting Investments.